Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset market. And I am joined this week by Santiago Roel Santos from Inversion. Thanks for joining.
Thanks, Jeff. It's good to be in good company. I know you've been talking a lot about just valuation and taking a more fundamental approach, which, clearly a lot of the crypto space historically has been venture, and I understand that perspective. I've done it for the better part of the last 10 years, and I think it pays to re-underwrite the thesis and understand, hey, are the way we've been historically been thinking about this asset class going to be how everyone talks about flows, and I get it, and so you have to wonder, well, how is the incremental flow going to perceive this asset class? And that's sort of a question that I constantly think about when I re-underwrite my thesis over and over again.
Yeah, so let's dive into that. So for those who have read this week's blog on our website, That's Our Two Satoshis, I once again was talking about the disconnect between networks and tokens. A lot of you have heard my views in the past, just trying to figure out why layer one blockchains continue to be the majority of the market cap of the token space, despite the fact that DeFi and other applications make up the majority of the revenue. And also trying to figure out, how do you actually value these, right? Do you look at the fat protocol thesis, which we've been arguing for years, no longer makes any sense. Not sure it ever did, but it was interesting, but I don't think it was accurate. Then we went into, some of the parts analysis, looking at, what is the financial value in cash flows? What is the utility value in terms of do you actually need to hold the tokens to use them for gas or anything else versus what is just the social value? And I think, others have been pretty vocal about this as well. Tom Lee at Fundstrat, for example, believes that whichever L1 wins the real world asset race, think tokenized stocks, real estate, stable coins, which is just tokenized debt, that they're ultimately going to be the winner. And obviously he thinks Ethereum is going to be the winner. Matt Hugin at Bitwise argues that, blockchains are just so underutilized today relative to what they're going to be utilized in the future that, therefore we don't know what the valuation is, but the TAM is huge. And, I think you, Santiago, you debated Hasib at Dragonfly last week, where he had sort of a similar kind of debate of just network effect and Metcalfe's law and Facebook's growth and huge TAM times probability of success, et cetera. And then there's people more pragmatic like you and I, which is that's all great, but the data today shows that almost all of these are overvalued and make no sense relative to today's usage. And so let's start there. Did you learn anything on that debate with Hasib that changed your views at all in terms of what you think these things are worth or what the bull case is?
No, I mean, I started investing earlier than Hasib in this stuff. I don't think anyone disputes the potential, but everything, is it priced in?
Yeah.
And that's something, look, it's a really hard question. And I started thinking more deeply about this because from two lenses. One, as a venture investor, then you look at why are projects failing in the space? And then you realize, oh, wait a minute, we haven't really grown the active user base on chain. And then someone would say, wait a minute, Tether and Binance, really profitable. I'm like, well, yes, but does that accrue? Does that actually bring value and fees down to the L1? And the answer is no. So I didn't learn anything particularly new. Look, there's plenty of sexy narratives that you can overfit to kind of think about the potential of this technology. I'm not discounting any of that. I think this is really exciting. We wouldn't be sitting in this chair talking about this stuff. We could be doing a million other things. But I do think that most of the venture investors in this space, much of the folks in this space just don't want to see the elephant in the room, which is, hey, which by the way, a traditional guy in Silicon Valley would say, hey, if stablecoins are the next, room temperature semiconductors, why don't you have more than 40 million users using this technology? Just pause there for a minute, and it begs the question, why don't we have more users? And if we don't have this many users, then there's certainly not enough fees. But yeah, look, you can kind of, I think you've been kind of following a similar thread line probably longer than I have, where the discussion really falls apart is people have different time horizons, or, hey, you're valuing something like a stock, it's a commodity, and why you're treating Bitcoin differently than all this other stuff. So it's kind of a very tiring argument. I mean, I'm not here to convince anyone other than just protect my principle. And I just candidly don't feel like I'm getting paid enough to take this level of risk in some of the major L1s.
Yeah. So it's funny because, again, I think people maybe view me as being one of the more negative biased towards L1s, and it's not really that I'm negatively biased. It's like you. I just think that the price doesn't make sense for the risk that you're taking. I do think a lot of crypto assets have literally zero value, whereas that's not the case with L1s. They have some value. It's just questioning what that value is. But I think where it gets interesting to me is like, I'm not sure if the 40 million users is the right way to think about this, in the sense that, what's the total addressable market of cash, right? The total addressable market of cash is literally everybody, right? So everybody has cash in some way, shape, or form. And that's a workflow issue more than a technology issue, right? The workflows of the world, not just obviously in the US and other developed nations, but everywhere, the workflow is essentially a cash-based model, whether you like it or not. Similarly, if you want to be an investor, the workflow steers you towards brokerage accounts and therefore stocks and bonds. And it's a lot harder to do the things that aren't part of that workflow, right? Real estate is obviously way harder than stocks and bonds. So again, like, would you say that you wouldn't necessarily say that the total addressable market of real estate is lower than the total addressable market of stocks and bonds? It's simply the workflow has just made it easier for people to access that stuff, right? And I think that's where I get hung up on the total addressable market of crypto, or like, why do we only have 40 million users? And to me, at this point, it actually comes more down to workflow than it does technology, meaning like we spent the last 10 years basically figuring out if this technology actually mattered or not. And there was times, 5 years ago, 8 years ago, 10 years ago, where like, we really didn't know. We're like, yeah, it's kind of interesting. It's cool. Maybe it works. Maybe it's helpful, but we don't know if blockchain actually works that well for certain things. Now that's basically been answered at this point, right? We know smart contracts work. We know things like Polymarket work better having escrow in a smart contract. We know that, it's cheaper and faster and better for real-time settlement of financial assets. So to me, the reason the crypto really only has 40 million active users is largely just because it hasn't been built into anyone's workflow yet. Like, you're not going to get mutual funds or banks or brokerages to care about a crypto asset until it's built into their workflows, in the same way that, like, why do people still use Bloomberg, even though almost everything on a Bloomberg terminal is now free? It's like, it's part of Wall Street's workflow. They log in every day as soon as they're in their office. They know people are on there. So I guess that's the one pushback I have, in terms of, again, like, I don't know if L1s will ever be valuable, but I do think that there is a world where blockchain is so much more impactful than it is today, simply because it's finally starting to get built into these workflows.
Yeah. I'll tell you where my thesis can be very wrong. It can be very wrong in simply looking at it from a revenue lens and a fundamental cash flow based analysis. You can't make sense of the valuation, but there is social currency and value attached to it. So it may not be strictly gold, but there's some mimetic desire component, staying power and brand, in the same way that you see a goodwill in the balance sheet of companies, right? There's brand power that Cardano has, that Ripple has, that Ethereum has, because they were there. And people, you walk around the street, most people have heard about Cardano and Ripple. They can't even pronounce Solana. So there's goodwill there that I think it's just a nebulous figure that, again, I'm not here to tell you how much that's worth, but clearly there's a lot of value. So I could be very wrong there. And I have been very, very wrong in the past, where I would have told you the top 10 would have very radically changed. Maybe Solana and some of the projects that are doing real work like Aave would have pushed higher up in the top 100 market cap list, but they haven't. Where I could also be wrong is, look, there takes a major inflection, right? I think, like most people in early 2000s, to overfit an analogy, didn't really understand how smartphones are going to totally change the game. And it was only until the third generation iPhone that was matched with really high kind of, I think it was L2 or L3, but sorry, 2G or 3G, where like, it was like, okay, shit's really working. And look, it's,
I'd go further back to the cell towers in that analogy then as well. With, like, American Tower, Crown Castle, SBA Communications, like, all those guys were basically bankrupt in the early 2000s, until eventually people started to realize, like, oh my God, this build out is worth it, because look at how, nobody predicted that every single person in the world, including like homeless people and people in like underdeveloped nations, were going to have a computer in their pocket that they used every day. It's almost similar to the AI build out right now. It's like, everybody's worried about, is the CapEx on AI going to actually materialize enough into usage? And it's like, we don't know the answer, but again, it's very similar to what we've seen in other technologies in the past.
Yeah. There's always a lag between CapEx investment and usage. You see that time and time again. But I'll tell you one thing that I haven't heard a very compelling argument or pushback, which is, Yeah, we underestimate what happens in 10 years, overestimate what happens in 2. But as an investor, I think you have to discount all of those cash flows, all of that potential to today. And I think that, even going back to dot-com bubble, like I was just going through that because you hear these analogies and it's just good to quantify it. Like Amazon never traded above 26 times price to revenue. Price to earnings did blow out. Snowflake, probably one of the most recent examples, like is growing, compounding, growing, 100% year over year. That price to sales really very quickly normalized. Like, it's just like physics. You
Yep.
mean revert. It's hard to sustain these things. And I will say, like, maybe the next couple of years, one phenomena that I think we'll see, to your point, like before it was like just sell the dream, never show revenue. Like it was just a white paper and it's captivating. And a lot of this was just flows, right? People in places where you don't have access to. Most of the time, people approach these tokens as like a levered Nasdaq bet. And that was great. I mean, there's a ton of flows, way more. This again, where I could be really wrong, which is the world just sees crypto as a way to punt and diversify away from, their, the ability to just buy real estate in your country or denominate it in your own currency. So capital flight, and I could be very, very wrong there. I think like we haven't really scratched the surface. And I think as more UI UX onboarding happens, like we could be in a world where it just continues to get way more rational.
Yeah. I think
But I think over time,
good.
yeah, but I think over time, like things correct. Like no matter what, like this time is not different. Like at some point, things get totally out of hand, and things mean revert, and they correct very fast and very aggressively. And I don't want to be caught on the wrong side of the trade.
Yeah, I think the super bull case to me for L1s in general is that in a very simplified way, what we've learned is that the real purpose of a blockchain is to move assets. That's basically what it is, right? The way the internet moved, communication transfer, blockchain moves asset transfer. And if you think about it in that lens, there's $600 trillion or more across the globe right now of stocks, bonds, and real estate. Not to mention, other hard assets like, auto titles and jewelry and whatever else in the world, right? Like, you're talking almost a quadrillion of assets that are off chain today. And if you look at the actual assets that are on chain, the majority of it is a made up asset called Bitcoin. Regardless of what you think about Bitcoin, it's completely made up. The rest of it is, meme coins and, other kind of, token, startup like equity of random things like a pump.fund or something like that. But the only thing that's really growing is stablecoins, which is just tokenized debt. So you've got 300 billion roughly of tokenized debt on chain. And if you believe that that 300 billion is going to grow to a quadrillion, because you're going to start seeing not just tokenized treasuries, but tokenized all forms of debt, all forms of tokenized equities, all forms of tokenized real estate and other assets, then no matter what we think the value of an L1 is, to your point about like as stablecoins grow, does it really accrue any value to the chain? Eventually, if you have a quadrillion of assets on chain, it has to go somewhere. And that's the bull case, right? And then what you do is you say, okay, I doubt that travels to all of the chains. There's probably going to be 1, 2, maybe 3 winners. And I would imagine, whether it makes sense or not, that those winners would actually trade meaningfully higher than they are today.
Yeah.
Right.
And by the way, that is entirely possible. I mean, you probability weight that scenario, and there is a credible version of that happening. Again, I just don't think I'm getting paid enough to take that risk.
Yeah.
And that's where, like, if you take, it's sort of like the TAM analysis, which is really flawed, like top down, which is, if we capture just a very, very small percentage of a massive, massive market, we'll win. What is underneath that analysis is, well, you then have to stack another layer of assumptions there, which is, hey, it will be a winner take all or a majority take all market. And I don't think you're just seeing that in real time. And again, part of my analysis was like, what are the real moats of these systems? Again, let's not forget open source software. I think that the network effects is sort of a catch-all phrase that I think people use and overfit, and Metcalfe's law, and you can slice it. And again, it's possible that you have a scenario where Ethereum captures the vast majority of that flow. And then you start going a layer deeper. Is the value accrual going to happen at the L1, or should you be buying maybe layer 2 tokens, because layer 2 tokens are capturing most of that value? And so, again, like maybe
not to mention whether or not Ethereum and the L2s on Ethereum are even really the market leader or not. In the sense, again, less than 0.0001% of all the world's assets are even on chain today. So what difference does it make if Ethereum is the leader of nothing at the moment, right?
Yeah, I mean, like infrastructure, the amount of investment and competition we're seeing in the L1 is fiercely, fiercely competitive. Any very competitive industry like airlines just trends to a really, the take rate of these systems, I think, is going to be way lower than perhaps people are underwriting. And then the monetary premium argument just kind of falls in its head. Like most people say, wait a minute. If a lot of stuff happens on chain and people want to buy stuff on these systems, you're going to have to hold the base currency. You're like, really? I mean, it begs the question today. That's not the case, right? Because a lot of times you can just go gasless, or you can go direct and buy that asset. And by the way, if you're buying through an exchange, user aggregation theory, you're not. I mean, that doesn't accrue value to the system.
Right.
Like,
not
if you're
again, for Ethereum, for example, like, most people don't even know this. You can pay gas using USDC. You don't even have to use ETH to pay gas. So.
Correct. And look, again, like, at a more fundamental level, Jeff, you probably sympathize with this view as well, which is I'm very skeptical, but I'm not cynical and I'm not a pessimist. I'm very much optimistic about the potential of the technology, but let's not confuse being, optimistic with also being a sophisticated investor trying to make sense of whether you're being compensated enough to take this level of risk. And that's a very personal decision. I'm not here to tell you that you should be short or go long, or I'm just simply, I manage my own capital. I don't manage other people's capital. And so that's just my opinion. And I do struggle. And a lot of people say, wait a minute, but like you got to, what about like what made you change your mind recently? And going back, like when you're investing in a project in early stage, it's a very different valuation. And you constantly need to re-underwrite that, because every day that I hold a position is a day that I re-underwrite and I'm buying that position.
Okay. Yeah, and I think it's funny a lot. Again, I'm not. A lot of people internally here at Arca think I'm a permabull. Like, I am more bullish than anybody in the room at all times. So this is not a reflection of my lack of bullishness on the industry. Again, like, I think there has never been a higher probability of success for blockchain and crypto in general. I mean, we've been doing this at Arca now for almost 8 years. Like, at never in any point in our investing on behalf of Arca, or my investing personally before Arca, did I ever have the level of confidence that I have today. I think there's no question this technology is going to be a huge player in all of financial asset transfer. It's just a matter of like, well, how do you capture that growth? And historically, thus far, the only areas that have captured any of that actual growth are stablecoins, DeFi, and RWAs. It hasn't really been, to your point about the L1s. So I want to ask you this, because Canton, obviously there's been hundreds of new chains, right? I mean, the biggest, if you want to claim the biggest difference between 2021 and 2025 in terms of why did price go straight up in 21 and why does it go straight down now, is that there actually was too much demand for block space in 2021 relative to the block space that was available, which is why fees were going crazy, because you had NFTs and DeFi and everything, putting stress on the system. And then you fast forward to today, and the opposite is true. There's just way too much block space relative to demand, because there's 8,000 L1s and new ones pop up left and right. And, the token goes straight down because there's no actual activity, because there's too much block space, right? That's why Monad and Canton Coin and Barachain and everything else that's launched has just gone straight down. Like, there's just no demand for new block space yet. But where I think it's interesting is on Canton Coin. So this is what I wanted to get your opinion on. So for those not familiar, Canton Coin is another L1. I don't care about the technology aspect of what's different in terms of speed or security or anything else they're pitching. But from a business development standpoint, they've done something right, which is they've raised $500 million from the biggest players on Wall Street, right? They've raised from Citadel to BNY Mellon and
JP Morgan, DRW, TradeWeb, pretty much a lot of heavy hitters in the TradFi scene.
Right. So what I think is interesting about Canton Coin is, like, philosophically, I actually think there's a higher probability of Canton Coin ultimately being an L1 that matters than probably Ethereum and Solana, just because A, they have massive investors who control all the world's assets, and B, they're focused on a very specific part of asset transfer, which is, credit and equities and repo and all the things that, have, trillions of dollars of transactions a day. So intuitively, I'm actually kind of really interested in Canton from that standpoint, because I want to see, can these guys prove my thesis that blockchain itself works great, but the assets that are available today on blockchain suck. So let's change the assets, and therefore blockchains will become more valuable. But then when you look at the token itself, you're like, well, wait a minute. if we're right that there's very little financial value being driven in these L1s, and there's almost no utility value because you barely need to own the token at all in order to use the network, and it does just come down to brand and social awareness, like you were talking about with Ripple and Cardano, then the question is, well, how in the hell is something like Canton Coin, which is basically labeled as a private cabal chain of Wall Street? It's basically the epitome of Occupy Wall Street, right? You go back to 2008 when everybody hated the banks and brokerages, and now you've got a coin that basically has a sign out front that says, "Hey, do you hate banks and brokerages? Come use Canton Coin." So it'll be interesting to see if Canton inadvertently validates our thesis, which is the network itself can grow and be used in incredible ways, while the token basically just goes down forever. And I actually think it is probably a good example of that. Because again, it will have no brand, it will have no social value at all. Like nobody wants to say, yeah, I'm really supporting the Occupy Wall Street chain.
Yeah.
So anyway, what's your thought on that?
Well, there's a lot of three thoughts in there. One, I think the protocols that win over the next 10 years plus are ones that really focus on user aggregation, like that go-to-market of acquiring users. It's BD muscle. Solana has a more centralized unit versus Ethereum that has competing factions from Tom Lee to Joe Lubin and Sharpling and a couple others, coordinated to some degree. And then you have Canton, which is probably on the more farther end of that spectrum, which is raised capital. There's motivated people. I go back to studying the history of how the Visa network actually came to being. It's a massive, massive coordination effort. And it took a while, but that was, Visa right now is a $655 billion asset. Again, not too dissimilar from Ethereum. It's Ethereum at 300. What would you rather own, Jeff? Visa at 655 or Ethereum at 380? One maybe has more baked in growth. Visa, you could argue, may reap the benefits of transitioning over to their flow to blockchain. And then so that's sort of a core thesis that I have is like there's a lot of techno optimism in the market. And then the natural second order effect of that is that then they're short or negative a whole host of like legacy systems that presumably new technology is going to blow up. And there is a creative destruction element, but I think you're now seeing companies like Stripe really say, hey, wait a minute, or maybe JP Morgan and Goldman say, hey, wait a minute, there's this thing called blockchain. We can do it now because it's regulated. We can just lower costs by using these systems. Our business, like we accrue most of that value. So it will, I think that's part of my constant thinking is if all of the quadrillions that you talk about come on chain, where's that value going to be distributed? And who's in a better position to capture that value? And I always kind of go back to if you control the user, you control how much you monetize and how much you share. And so clearly, like, again, part of my re-underwriting is seeing something like Canton or Tempo and say, okay, what's really the differentiation here of an L1 and why couldn't Canton capture a lot of that flow? And are they going to benefit, or is it going to be mostly JP Morgan, Goldman that are doing the same workflow, just faster, better, cheaper?
Yeah, and exactly. And I think it goes back to, anybody who's been in crypto for long enough at some point has heard somebody say, well, if you could have owned the internet, the equity of the internet, what would that be worth? And be like, well, it's a weird question because one, it's, like you said, it's a protocol, it's a public good. So you can't really even think about what the equity of that would be worth. But two, I don't even know if it would be worth that much because, again, the applications that built on the internet are the ones who accrued all the value. Now, you could argue that if the internet somehow charged a fee to all of the users and all the companies building on it, then it would be worth an enormous amount, right? So like maybe that's where blockchains are headed is like, and this is something internally that a lot of the folks at Arca believe in, not necessarily myself, but others, is that ultimately that's what a blockchain will have to do. It has to charge higher rent to anybody and anyone that's building on it, which is the antithesis of what a blockchain is supposed to solve for, which is cheaper transaction costs. So it's a weird dynamic. And to your point about like whoever captures the users captures, can ultimately monetize. That's probably where I think, and I wrote this at the very end of the blog this week as well. This is where I think it's probably most interesting is that, you can't just do something with users in an empty room. They have to do something, right? So like, I think the problem with an L1 right now is it does sort of control and organize the users, but then you have to build a stablecoin or a DEX on top of it to actually make any money, right? Stablecoins make money, DEXs make money, L1s just sort of aggregate the users. And I think that's what we've learned over the last few years is it doesn't matter what order you build in, but ultimately you have to vertically integrate with all three. So take Binance, Coinbase, and Hyperliquid, for example. All three of them started as exchanges, but now they're all building their L1s and their own stablecoins, right? Binance had, the BNB chain. It tried to have its BUSD. Coinbase now has the base chain. It's also obviously fully partnered with USDC. Hyperliquid, obviously, not just what it's doing with HIP3, but integrating stablecoins. Like that's ultimately one way. The other way is you start as a stablecoin and then you build out the L1 and the DEXs, right? So like what are Circle and Tether doing right now, right? They're both trying to build their own L1s. And then, we haven't seen it yet, but like the other one is you start as an L1 and then you build out your own stablecoin in your DEX. So if you follow the Solana community, for example, and everyone all up in arms because Solana, despite how good the technology is, really has only been used for a meme coin casino in any meaningful way. What is the Solana community talking about right now? They're saying, well, why don't we have our own DEX? Why don't we have our own stablecoin? Why do we keep allowing? And it's like, that's clearly where the market is headed, is that you have to vertically integrate. You have to own the exchange. You have to own the stablecoin. You have to own the DEX. And that's how you monetize the users. So it'll be interesting to see if that plays out.
I'd be, to my point, what would make me change my thesis? Best believe I'm going to pay a constant attention. I do think that I would pay a higher multiple for a vertically integrated L1 that is capturing more business, more flow, and has a stronger moat, right? If Canton or, some other system like Hyperliquid or what have you is able to control the user first and then add other modules to monetize that user. Yep. And I think if you can capture that value, then I think that type of business has more predictability to their transactions, their activity on chain. And I think that type of system should command a higher multiple, at that point, I would be willing to take a bit of a leap of faith for them to continue to grow. But right now there's just too much competition. And I think we are entering a new stage where the institutions are credibly now finally using these systems on chain. And their choice of deployment, I think you got to pay a lot of attention to that.
Yeah.
And Canton, Tempo, Hyperliquid, I do think it just, you ought to wonder, hey, have we overestimated the moats of these systems? Have we overestimated their ability to monetize? It's not to say that quadrillions can't come on chain. They likely will. That's why we're here. I think part of our business is to appreciate where that value capture is going to happen and then invest accordingly.
And truthfully, if there's only 40 million daily active users today, who cares if you have a moat or not? That's nothing compared to 8 billion people in the world. So, even if you do have a moat, nobody's actually attracted enough users to matter about how big their moat is anyway. So, all right, man, listen, this is awesome. We're bumping up on time. Obviously, anybody who reads my stuff, you can find our blog at our website, ar.ca/blog. You can read the whole That's Our Two Satoshis. Santiago, how can people find you? What do you want to leave people with?
Yeah, Santiago Roel on Twitter or Inversion_cap if you want to learn more about Inversion.
Terrific. Well, this is great. I very much appreciate you coming on. We'll talk soon. Very nice talking to you. And everyone else, we'll see you next week. Thanks, everybody.
All right. Thanks, Jeff.